The Hustleshare podcast is brought to you by PDAX. PDAX is a homegrown cryptocurrency exchange that offers the best rates among local cryptocurrency exchanges. Download the PDAX app now on the Google Play Store, App Store, or Huawei App Gallery. Start trading Bitcoin, Ethereum, and other cryptocurrencies for as low as 50 pesos by signing up on podlink.co/hustlesharepdax. Also powered by Pod Machine, the simplest way to grow and edit your podcast. Sign up now at podmachine.com and use the code Hustleshare to get one free edit. Welcome to the Hustleshare Soonicorn Sessions. The show where we discuss the journeys of Southeast Asia's most successful startups that are soon going to be the region's next unicorns. Now here's your host, Ronster Baetiong.
Welcome to the third Soonicorn Sessions, and this is probably one of the quickest comebacks ever in Hustleshare because literally I've had this guy last year, August 2021, when they just announced their Series B. They're one of those three pillars of startups that actually was able to raise Series B and above last year. But again, people are trying to kill your record this year. First quarter, three already became Soonicorns as well. But before I get carried away, I need to welcome my good friend, and not just a good friend, he is a great singer. Actually, maybe later we'll have him sing already. Let's welcome Rollan of Growsari. Welcome back.
Thanks, Ron. Happy to be back.
Yes. And again, thanks so much again for making the time. I know you're super busy, but we had to get you back because again, you're one of the rare breeds that are now considered the Soonicorns. But two things. Again, I don't get to ask you what's your hustle anymore. We go straight to the jugular. And just recap us from August 2021 to March 2022, which is the time when we're recording this. Walk us through the biggest milestones that you had to go through, because again, it's just more than half a year, but man, that half a year is an eternity in startup life.
That's right. Well, I guess the most obvious one is shortly after our conversation, we got into Series C fundraising, and shortly after, because we started that I think around October, and then we closed the first tranche just at the start of 2022. But it was really driven by the sentiment that we felt like we're really getting over the pandemic, not just us as a business, but the economy at large. So that was the feeling, and the most important thing for us to get back to was our geographic expansion, which took a really big pause during the pandemic because of many reasons. Right, we don't know how to deal with the different restrictions of the LGUs. How will we send our team safely? And are we safe to interact with sari stores when we explain to them what the Growsari app will do, right? So it took a bit of time to recodify that. But the Series C was really kind of a big driver to continue that geographic expansion. The other thing that really happened in a good way for us for 2021 was the growth of our non-FMCG businesses. So the bills payment, the telco, the e-commerce order assistant. So and even working capital loans in the form of buy now, pay later. So we almost doubled our transaction value per store, largely driven by new revenue streams. So that also allowed us to do a bigger story around what would Series C be in store for us.
When you say Series C, first tranche, does that mean that well, just to give context for those people who are raising, okay, in a perfect in a smaller check, 20K, 100K, 500K, you'll probably get all of that one time, big time. Okay. When you close a term sheet, someone will send that to you probably within a week's time after DD. But Series C, first tranche, does that mean? And again, this is probably the first time we're talking about this in public, so thank you.
No worries.
Right, but does that mean the whole round is closed, or this is just the first, say, the lead putting the money in, and then so that everybody else will follow?
Yeah. So I think what I'm learning is that there's no like fixed structure on how to deal with these things.
Mhm.
A lot of it is really the meeting of the eye of investors and founders, but investors both
Mhm.
existing and new investors, right?
Got it.
Um, and typically also within the VC world, I've learned
Mm.
is that there's also an aspect of who's coming in. There's also a FOMO
Absolutely.
aspect, right?
And
Just not just
it's
between
who,
founders.
right?
It's
Yeah.
who also, right? So
Mm.
so if a VC company saw someone coming in, somehow they feel like, oh, did I miss a chance to get
Correct.
into that deal, right?
Mhm.
So we realized that maybe if we're able to get some news out about the lead, it will create some sort of interest. We don't have to finish off the entire
FOMO. Got
round,
it. Mm.
right? Of course, um, it doesn't always pan out the way you want to,
Yeah.
but it's when you're dealing with the investors at negotiation stage, most of it are in a confidential state,
Yeah.
right? You can't talk about your conversation with other investors,
But
and of course
there's
you
a
can't.
but there
Yeah,
also. Man, these guys talk like crazy.
they
Okay.
do. That's right.
There
They
is
do.
this magic back channel that they call deal flow. Okay, so this deal flow technically is that's where FOMO is actually really made. When somebody sniffs out, it's just like the rumor mill in the NBA. Like, oh, someone's gonna get traded, huh? Someone they're gonna
That's
sign
right.
LeBron
That's
James
right.
and whatnot.
Yeah.
Man, the FOMO is real. And you're right, because at the end of the day, um, yes, there's a lot of investors. They probably have the same buying power, but they don't have the
Yeah.
same effect. So like for example, upper echelon here in the region, right? These are the open spaces that invested in Kumu in Kumu, right? For you guys, it's who led you Series B? Oh, Wavemaker, of
Series B,
course.
Wavemaker, and Pavilion.
Right.
Yeah.
So there. So that's big. Then that the biggest voice is Tiger. You know, SoftBank, you name it, right? And then it depends
Yeah.
on the stage, but there are funds here that once they start doing things, they play it as the Pied Piper. Everybody else just follows, right? So you
Yeah.
want to get those, but there's a caveat. Those guys are really hard to close. It's really, really hard to.
Yeah.
You need to check all the boxes possible because you're probably gonna
Yeah.
get a
Yeah.
no than a yes. So
Yeah.
for
And
you, yeah, go. Sorry.
no. You're right. The basically getting one investor to agree and pass their due diligence is quite a feat, and they also know how difficult the due diligences of other VCs
Yeah.
are, right? So I guess when you're vetted by someone, it creates that FOMO effect. Anyway, yeah, you're saying something.
No, that's true. And at the end of the day, for you guys, I want to understand. So, okay, I not Series B, you went Series C, and I heard this during the Build Startup Festival. I think Gabby of YGG went through the same thing. People lost out on their, I think, seed, and then became I forgot which, but they went back to back, double valuation. Because people, A16Z paid at double the valuation because they missed out on the month prior. What was that like
Wow.
for you? So Series B to Series C, and it would if that was a trigger point, was there a big gap for? I mean, you don't have to discuss the valuation, of course, but how
Yeah.
was that with the dynamics like?
No, but I think between Series B and Series C, the business also just grew exponentially.
Mm,
So even though the period between B and C was quite short, the VDR, the data room
Yeah.
looks completely different
Mhm.
during the Series C, Judy versus the Series B. So
Got it.
it was also good that there was still momentum from the Series B announcement,
Mm.
but it was really the business that kind of spoke for itself.
No, and it's true. And this is what I remember. I'll just segue this a little bit. During the Build Startup Festival, several guys were talking about PR. And they were thanking me, like, what the fuck are you thanking me for? Like, what did I do? I was just your hype man. I'm happy to share your story. But apparently it does play a part really in creating that PR to create that momentum, whether you're trying to push product, push fundraising, that it does help, right? It varies in different effects, like they were able to hire better talent, they were able to get
Right.
client, they were able to get again a lead investor. So again, that the PR thing really helps. But PR is not just all about PR. I want to understand
Yes.
from that point on, when you scale that fast, how is the team like? Because man, it's hard to build a team that holds through, and more importantly, it's hard to create a culture that that scales. Because
Right.
as you
Yeah.
get more people, man, the whole dynamic just changes. So how did you do that, and how's the big how big is the team now?
The team is much bigger now. I think the management team, the headquarter size is I think over 200 people now,
What?
which is probably doubled since we last discussed in terms of just HQ people.
That's crazy.
I don't think I have the perfect answer to your question on how do you scale culture. I think
Yeah,
we're all trying to navigate
figure that
that,
out.
but yeah, but it helps to get strong talents regardless, right? Because if you get people who not only have good credentials, a good track record, but also mature and understands the vision, at least there's a common ground to come back to,
Mm.
because the debates will always be there. But sometimes, although I'm having a lot more debates now with a lot more smart people,
Yes, which is good.
at the end of the day, you're right. At the end of the day, it's still a blessing that I'm able to debate with more smart people,
Right.
and it helps. So I think for us, we really tried to ramp up our senior leadership
Yeah.
team. We have a new CFO. We were able to get the CMO. I think less than 2 years ago, so it's probably around Series B time. Also, she was quite new. We just got a chief people officer. We're able to ramp up our
Oh.
operations team. We hired an operations director. So there's still quite a few spots to fill, but
Mm.
that was also in a way the Series B announcement helped put some credibility around people who probably would not have otherwise considered us,
Absolutely.
to at least take a second look.
Yes.
So that's helpful.
They'll see like, oh, so they have budget, they can afford it.
Yeah. They're not gonna close
Like,
in
okay,
the
I'm not
next
gonna
year or
go
so.
to this big whatever FMCG brand. Oh, okay, we can do this. No, and that's true because uh at this point, and again, I'm learning this the hard way because when again, there's nothing at scale. I mean, I have a 50-man team right now. It's still baby shark
That's big, man.
compare. Still a baby shark. Again, I look at you, freaking Kuma 600. You have freaking 200. Great deals has I don't know. Like we're a baby shark. Okay, but it's true. The last thing you want to do surround yourself with as you scale is two types of people. Yes, men. You need healthy debates in order to get to where you want to be. And number two, you want to get the right generals. Because if you get your soldiers and then they are like, okay, so who's gonna do this? Who's gonna do what? And that they're all of them are your direct one downs, you're gonna struggle. Because you see yourself spread too thin, like shoot, I'm doing marketing, product, fundraising, and all these things, and there's no adult in the room. It's gonna be a mess. Now let's just zero in on the metrics, right? I remember the last time we talked. We talked. We talked. We talked. it was a totally different narrative with the metrics you chased. At Series B to Series C, what were those metrics that mattered to you the most? Because at this point, they call it growth staging. It's no longer
Mm.
just, do you have product market fit? Do you have some traction?
Yeah.
Dude, you're looking for hyper growth. What were those metrics like?
So for us, I think the series B2C, and I don't know for other startups, the B2C metrics in terms of what they were or what they are, it didn't really change. So transaction
Mm,
value, active stores, engagement, retention,
just
and then
higher.
just higher. And just higher, just faster, and
And
just more
scarier.
and scarier in terms of, is this sustainable, right? Those questions start to um, creep in a bit more heavily, I guess, in those discussions. But the way to think about it is, um, if the metrics change all the time by series, then it probably means you're also changing your model or pivoting, which may or may not be a good thing. Right. So it depends on, I guess, the story you're trying to paint.
Correct. And again, there's well, for you can afford to do that in between seed, pre-A, A. But at A and above, dude, whatever, it's touch move at that point, right? You can't. You're gonna have a hard time if you pivot that late, right? Because imagine pivoting not just the product but the whole team. It's a mess,
Yeah,
right?
yeah, yeah.
It's gonna be crazy. All right, last few questions before I take our first break. Let's go personal now. This is what I love it because when I last had you, you had one of the most amazing stories on Hustleshare of struggle, almost dying with the startup and whatnot. Had your also personal battles you had to go through. But in this phase, what were the hardest things that you had to go through in between? Say the last time we caught up, August to now.
I think a lot of it now is about um, kind of getting the startup. How should I say this? As founders, it's important for us that the business lives beyond us, right?
Yeah,
In the sense that,
legacy.
yeah, or like that, it's, I cannot be the smartest person in the room, right? My CFO needs to be much better than me in finance. My CMO needs to be much better than me in marketing.
Mhm.
And it's really paving the way for these leaders, these talents that will take the company to the next level. I think that's one. And it's always a tug between how much do you tell them just go to town with your ideas versus let's try and keep focused to what we need to do.
Yeah,
But equally important, I guess, are the people who've been with us. So even if I say people who've been with us for 3 years, 3 years is nothing. But in startup, people who've been with us for 3 years, that's like 10 years, right?
yeah,
In terms of probably a typical job. Um, we need to start to think about what development means for them and what growth means for them. Um, and it's tough because uh, it's very easy in the beginning to say that the training is on the job.
correct.
And by and large, that's still true even if you're B, C, D, E, F, G, I think.
Yeah,
But um, but you need to be a bit more formal about how you institutionalize knowledge transfer. How do you create more culture building initiatives? And because the team is much bigger, and now we have teams sitting in Iloilo, in Bicol,
wow.
right in La Union. Um, how do you make sure there's a glue? And like I said, this is something that I don't have a perfect answer for. And this is something that we are kind of still working towards.
And that's true because I think I know what you're saying here because I've read this in a book way back. It's Good to Great with Jim Collins. We call it level 5 leadership because most successful startups end up at level 4 leadership. So I'll dig down a little bit. Level 4 leadership are these great companies that are very much founder led. But if you remove the founder, that company crumbles without the founder. So, for example, Apple. it's not the same without Steve Jobs, right? They were able to create a moat financially, of course. Yeah, they're still Apple per se, but look at the products, man. It's not the same. Level five leadership companies are that even if you remove the founder, it was actually able to get new heights that it sort of felt like the founder was the one holding it back, right? So, but only a very, very rare breed ever get to that. So yeah, it's hard to get in. Hopefully, we all end up doing that because at that point also, you're right there. You're expendable. All of us are expendable at that point. We're an executive, and you're gonna have to talk about and think about transitions and succession at that point. So yeah, I can't imagine myself thinking about that, but hopefully we get to Soonicorn sessions as well as but
I
last
think we're a long, long way from
oh
that.
my god. Yes,
But
me
we just have to
especially.
think about it.
All right, let's take our first break and when we come back, let's dig deeper and how you became a Soonicorn. Let's talk about that more after the break.
Hey hustlers, before we resume the episode, let me tell you a very quick secret. Do you guys ever wonder how we're able to consistently release episode after episode here in Hustleshare without missing a date over the past 3 years? Well, it's not just pure hustle, because I'm also running my podcast along with me running my startup full time. Now, for some of you who have listened to this podcast, you guys very well know that I created a startup that is designed to help the best podcasters in Southeast Asia to realize their full potential, which is called Podcast Network Asia. And over the past couple of years, we've achieved quite a lot in P&A, helping hundreds of podcasters create world-class episodes consistently. However, what we realize is that we are not really solving the real problem of all podcasters in the world if we're not going to productize the thing that we're very good at, which is helping podcasters solve the two main pain points of a podcaster, which is number one, nobody really likes to edit their own show. Especially if you're listening to your own voice. Just like me, I cringe a lot. Having to listen to my voice for 3 to 4 hours just to release a 1-hour episode. It's no fun. And then the other thing is that most podcasters, just like me, are absolutely clueless on how to properly grow their show, which is something that we have perfected in Podcast Network Asia. So we've decided to put this all in one product that helps any podcaster in the world create world-class shows that people will love and will continuously grow. And that's why we created Pod Machine. Pod Machine is the most affordable podcast subscription service that helps you with your podcasting needs. We've got everything from audio production, crafting designs, and marketing and growth support. So as a podcaster, you can now just focus on the thing that matters the most, creating great content for your listeners. So, if you are an existing podcaster or someone that actually wants to create their podcast now, no need to worry. You got a founder's discount by listening here on Hustleshare. So sign up now at podmachine.com. And aside from the free trial that you're going to get as a new user, I'm throwing in another one free edit as soon as you sign up for just as low as $49.99 USD a month to start creating a consistent and world-class podcast. Again, that's podmachine.com and use the code Hustleshare to get your founder discount. So if you have friends that are podcasters and if you want to have a podcast just like this, y'all know what to do. So just go and talk to you guys in Pod Machine.
And we're back from the break. We are still with Rollan of Growsari, our third Soonicorn session, right? But again, if you're curious about this guy's hustle and how he did it, just go all the way back, August 2021. That's where we dissected his amazing story and whatnot. If you just caught this, but again, one of the best stories I've ever had of literal grit. And that grit always evolves. And I want to now know and do a deep dive on how you change as a leader and as a founder. What were there things that you stopped doing and you started doing over this last few months that we we from the last time we caught up?
Um, I've been getting a lot of feedback around either being extremely a micromanager
Okay.
or
Okay.
extremely dark and absent, right?
Mm.
and,
There's
and
no in
in a
between.
way, there's
Mhm.
no in between. And I guess that's also how I work. I'm not a very good multitasker.
Yep.
And so I like to do things in a very focused way. But the good thing is I have fantastic partners, right? And we split the work between us. But what that does is if I'm kind of on you, I'm on you, and that could be quite, that's not good also. And some of my leaders are saying, hey, that's why you got me. You gotta let me, manage these things also. So I've been trying to figure out what the right balance is.
Yeah.
And the good thing is, I do have investors partners that
Mhm.
I get to talk with very, very regularly, and they help me recalibrate
Mhm.
where I spend my time, how I spend my time, and where it needs to go.
Yeah.
And of course, when you give me more, then naturally I will detach on some of those things, right? That's why it's very important that we are hiring the leaders, because then that gives you some level of comfort that
That's true.
things will run. So did that answer your question?
No, absolutely. And I'm nodding here because that's the same thing Steve C said 2 episodes ago. That he had the struggle, and I can't blame you because as founders, the biggest trust we also have is with ourselves, right? It's like I'm gonna help this guy, but the objective is not to really breathe somebody's neck down somebody's neck, but I just really want to get something done. But we got so used to if I do this, I'm probably gonna get this right. Steve said the same thing that his leadership team, he hired a few guys, and then he said, yeah, back off. You hired me to do this. Let me do this, right? But I can't blame it because I'm guilty of that too. That when I'm
Yeah,
in, I'm all in. And the pace is gonna get done by hook or by crook, right? But again, I'm not trying to be a dick here. I'm just trying to be someone to help you get there. But again, when you hire those people you kind of have to go through the same chain of command and let them call the shots. Because if not,
yeah,
then you also ostracize them per se.
yeah. And then the other interesting thing that I realized is that, and this is what we hate about big companies, right? That
Mm,
big companies are slow. There's
bureaucratic.
a lot of bureaucracy, etc. Right? And
Mm,
we're not necessarily huge, right? We're growing. We're bigger, but we're not yet there. But I can already see signals that we're slowing down, and
mm,
and these are the things that you try to make sure you avoid.
yeah.
But you realize that if you maintain exactly the same level of agility when you are much smaller, it also kills the organization, because
Correct.
at a certain size they also need some level of stability, right? So I'll give you an example. When we had just one or two warehouses,
Mm,
I can give everyone access to the warehouse. So if they want to say, hey, can we pilot this mode of collecting cash, or can we try
mm,
and pack the orders this way versus that way? And because it's a small team, everyone collaborates, and they can kind of do A/B test a lot better, right?
mm.
Now we have 22 warehouses between La Union to Iloilo,
Holy
right?
crap. Wow.
If you open that up to, and if everyone gets to access any of those 22 warehouses and they decide to do what sort of new
Ah,
pilot,
man.
right? It breaks down.
Kagulos.
So
That's what it is.
kagulo, 'di ba?
Right?
Kagulo kasi imagine, all of these people trying to access all warehouses and trying to
Mm.
do all their pilot tests. It's chaotic. And then you realize you have to add more criteria for them to scale things across the board. And
Mm.
that's going to slow down the process, right? But
Wow.
but some of it is required because the warehouse teams, if they always get 10 new things to test, it's gonna make their lives a living hell also. So again, I don't know the answer to that balance, but that's kind of what I noticed is an interesting thing we need to figure out as we grow. Because I don't think, how do you maintain the startup culture and agility even though maybe several years from now you're not called a startup
Yes.
anymore?
Mhm.
It's a tough one. I
And,
don't
and
know.
that's
I
true.
don't
And
know
you
the
know what?
answer.
It's eerie because like things that we hated in corporate, like I have to go through this, blah blah blah. It's now also starting to materialize, and it's weird because you kind of now understand that that's why pala. That's why
Yeah,
there's this
that's right.
structure. Because if we didn't have that structure, dude, it's kagulost all the time. But the thing is, again, that's the balance that you want. That the main advantage of being a startup, being agile, being fast, being innovative and whatnot, or being open to do crazy things, should still retain. And again, hopefully, when you become a real unicorn, now we'll go talk about it, and when we do catch up, like how did you do it? What changed? But for now, pending item, hold him accountable. Hustle share listeners. We'll talk to you. We'll talk to you about that. Now let's talk about one thing that is always going to be present: the most difficult decision that you made. Because you always had to be making tough calls, right? Firing someone, killing a project that was never, or realizing that you just spent a shit ton of money on something that didn't work, which always is a bitter pill. Was there anything that was really tough during this past few months that you had to swallow?
I I think we're on the verge of trying to answer that question. I don't think we've answered it yet, so we're still in that stage. But when you try to create a platform like Growsari, and you start to see the potential of what products and services you can put on top, and then the logistics capability that you're trying to build, you start to ask yourself, to what extent do I push the business that it still is in the same business, or am I trying to create a different business? Because again, trying to learn from what we're seeing in other markets, it seems like you have a very profitable core business, and then you try to expand it to a new revenue stream, and then somehow, some way, in some situations, the the inefficiencies, the new revenue streams are killing off your core business, and then you don't know, is that right, is that wrong? Then you ask yourself, well, moving to this new adjacency is going to give me better valuation, but then I'm not trying to play that game. I'm not here to drive up valuation. I'm here to build a sustainable business. But if I stick to my core, am I gonna be tagged as a very conservative founder? And therefore, even though that's what's best for the core, I don't get any funding at all because I'm not thinking big enough. So the good thing is our investors allow us to take the horns and like lead
Run with
this,
it.
but it's a very tough decision. I don't even know if it's one decision, but
Yeah.
this is something that we are working on as a collective leadership team. The other thing also is, the good thing about that is I don't necessarily have to deal with that alone anymore, right?
Yes.
Although that has never been the case. I mean, I do have very strong partners, but there's more of us to share that to
The
share
round
the
table
burden.
is bigger.
Yeah,
There you
it's a
go.
bit bigger, so it's good.
Absolutely. Okay, now let's just zero in furthermore. Again, this is uncharted territory for a lot of us, especially for you guys. What were the things you thought you knew coming into this Series B, Series C territory, Soonicorn territory? Because all rainbows and butterflies, it all looks like that from the outside, but I'm pretty sure it's treacherous when you're in there. What were those things you thought you knew at this point?
Well, I guess that's the thing, right? That's a very hard question to answer because when you are going through Judy, you're expected to give answers to everything. So you act like you know everything. Um, and then you have to execute
Yeah.
what you've sold, right?
Mhm.
Which is the challenge. I do think that over time, and maybe not just for BNC, um, but for even from seed to A, it's really the amount of execution that is needed. That we think we think the playbook is like this, and
Mhm.
therefore we take it. But somehow we learn that in this particular province, they don't like this product, or they
Mhm.
may need a different language to engage and things like that. Or culturally, this is what's better, and so it kind of just we just have to adapt.
Mhm.
I guess that way. The other thing that's super interesting for me is that as the Philippine startup ecosystem starts to mature
Mhm.
and we go past B and C, a lot of people will start to look at our model, and they'll either see, oh, that's interesting. Can I do something on that space? Or,
Yes.
you know, um, some version of what Growsari is doing. And now people are asking me, who are your competitors? And what do you think about that? Right? This is something we of course think about, but I think post B and C, because in a way, to what you said, right, there's like a handful of companies that have made it to B and C. We have to be a lot careful also
Yes.
about, we're paving the way, but how many ways are we paving for how many people?
Correct.
And how do you make sure that we protect the business around that? So there is a balance also between, I realize all your questions I'm not answering. I'm just giving you the two
No,
sides
but
of
it's
the thing we're talking
it's
about.
like TD.
I never gave you an answer today.
It's
I just
fine, but
gave you
it's
the two
all.
sides, right? So we want the ecosystem to grow.
Mm.
It's a good thing, but we want to make sure that our part of that ecosystem is also very clear. So again, it's a non-answer to your question.
No, but and that's
Uh,
fine because at this point, man, a lot of people don't have answers, and that's why you're. And I must be. I can't empathize because heck, I'm at pre-A and I already don't have a lot of the answers, and I would probably do the same thing that you did and just you know puzzle you out and then wisdom you out the whole time. But man, it's hard, and then that's what I want to know now. Back then, what keeps us awake at night is survival, payroll. How the hell am I gonna get out of this rut? At this point, I'm pretty sure you still don't have enough sleep. Oh, what are those things that run through your mind now when you don't have that type of sleep? That because again, one thing I realized, what, when I was fundraising or shorter runway, yeah, okay, that it makes you want to throw up. That type of losing sleep. But
yeah.
as the stakes go higher, apparently it's still the same. You're just thinking a different thing. What was that like for you?
It's a slightly different way now, and I do think that um um I have a much better psychological and mental state. I would
Mm.
say um at this the when I lose sleep, or when I think about things, and I don't even think about it that way anymore. But when I step back and I think about the business, it's really, we have now some luxury to think about um 6 months, a year, 2 years from now, and implications on the type of investments we will do. It's less about what do we do with this late order, um right? And it's partly because hopefully by then you have some system to take care of it, but you also have a stronger team to take care of that. But for us, so I think that's one. No, I think um it's better, it's a little bit more peaceful. um but you're right, it's the stakes are higher because the amount of budget we are talking about, right, are like 10x, 20 times. This is the absolute amount of money that we need to decide on. So it's a
It's,
different sort of stress.
yep.
And but I do think that over my personal experience also, right, that you mentioned, I also try and make sure that my life is not the business and the business is not my life, sort of a
Yes.
thing. I think that's important for your mental health also.
Yeah.
And if you have good people and that you will eventually learn how to trust, you realize that they're all just trying to do the right thing. So you don't
Yeah.
have to necessarily kill yourself over it and own everything. So I try to think about, hopefully, I have a 2-year-old kid. Am I spending enough time with
Terrible to
him?
spa. Oh, good luck.
Terrible to spa. So medyo may ganun na. How do I
Mm.
how do I make sure that I try to be healthier? But also I think, how do I make sure that the employees are energized every single day they show up? And so it's a different sort of thing.
That's a perfect segue to my next question, because is that also how you maintain focus? Having that balance of life and the things that you care about. Because in reality, if you're blessed to be a founder that you actually just love what you're doing, you won't want to get out of that too, right? Yes, there's going to be stress, but if you love it, that's
Yeah.
also what keeps you alive. But at this point, ER, I want to understand, like, is that also the way you maintain focus? How do you stay sharp? Because there's a million things that you have to decide on or take shots for. But how do you choose between what to do first at this point? Because again, you
Yeah.
built a machine, right?
Um,
What comes first?
as a personal strategy,
Mm.
I think what helps me is, one, um, do not scrimp on step back conversations with your co-founders. And the toughest thing about being a CEO, I think, is that you may think you don't have a boss. And if you embrace that mindset, I think that's a killer. I think you need
Yeah.
to. I think there you have to have bosses, not just one. Right? It's fine. Some people say it's consumerist boss, blah blah. Of course,
Your
but you
board
need.
is your boss. There you go.
Yeah.
Mm.
No, but my founders, they keep me. My co-founders, they keep me honest. My investors, they keep me honest. So making sure you have conversations with them, and seeking what sort of things they see outside, in a way, give feedback. It helps, right? Um, we One of our co-founders, he's really super passionate about people, and so he diligently makes sure we have consistent employee surveys um on a regular basis, and we read all the difficult comments, and we address them head on, which is another thing that I think helps put focus, is do the difficult meetings, like the ones that that you want to defer, and I don't want to do that meeting, that stuff, this is the easy one, right?
Yeah.
Do the ones, because the difficult meetings force the priorities, and the priorities drive the focus. um and so I think that has kind of helped me in a way,
Got it.
um stay sharp, if that's a relevant.
No, that's true. And it's because if you just delay things, it's just gonna take on a life of its own, right? And you want to be able to catch it when it's just a smoke, not a forest fire
Yeah.
already. Because
And then the
again,
third thing also, sorry, I forgot to mention, listen to your uh family and loved ones,
mm,
who completely has they probably don't understand your business, right? But they take cues based on how you respond at home, your emotional state, your psychological state. So sometimes, and I'm not always the best at this also, right? My wife will throw a comment. And of course, in my mind, it's like, what does she know about what I do? But
same, same. Yeah.
or my
Mm,
mom will say, "Hey, you should slow down," or
mm,
are you overreaching, blah blah.
mm.
Take them in the right context,
Yeah.
because these are also input to you. So because these people, at least there's no second guessing their intention, right? So it just gives you a balanced view. So yeah, so have step back conversation with your investors and founders. Do the difficult meetings, and make sure that the sense you get from your loved ones, you try and take that a bit more seriously.
Got it. All right. Last few questions before I let you go to Soonicorn territory. Just real tips here. What are the extra tips now in raising Series C? Is it all just hitting your metrics at that point, or what does the Series
Hmm.
C deck even look like at that point? Or a VDR look like? Whoa, just paint us a picture, because again, this is rare. We get exposed to this type of stuff. But if you
So
can shine some
I
light on it.
think again it's tough because every industry is different and every
Mm.
investor is different. It's really in a huge way being able to tell a story, but
Mm.
in the most practical sense, from an investor's perspective, with the amount of money that you're asking them and the type of valuation you're putting onto your company, these guys need a 10x ROI, right?
Wow.
Or an 8x. I mean, because these are serious investors. And if the return is not going to be at that level, 3x, 4x, 5x, 10x, then it's not going to be worth their time. So from their vantage point, that's that's the question they're going to ask themselves. Their IC is going to ask them that question. If I put $10 million on this company, is it going to be 50 million, 100 million, 30 million in 5 years? And how? How is that going to happen, right? It, in pre-seed, some of these things are a bit more speculative.
Yep.
And the market size is true, but it's also theoretical at the same time. In I guess BC plus, it needs to start to feel like it's real and that the returns are gonna come, because you have to understand that the more it's unclear for the investors, the more they're gonna put a lot of safety measures in the deal, right? Let's say I really like you,
But there's a but.
but but I'm not sure is your business gonna 5x or 10x, and therefore I get my money's return, or maybe I think my money's gonna grow 2x, 3x, but maybe I put it in some other startup. But I really like Ron as a founder. Then maybe let me de-risk it by asking for a higher liquidation preference. Let me protect my money, or let me add more oversight. I need to make sure that they know how to use their budget, so I want budget approval for
Eesh.
every amount beyond a certain amount.
Oh
So
my god.
we have to understand that if these clauses are there because they want to protect their upside,
Yeah,
and
of
they have
course.
all the right to do so because
Yeah.
they're taking the risk with us. So the more you de-risk, when you tell your story, the more you're making this return as tangible and as doable as possible,
Mhm.
the more you're able to hopefully take out some of those um clauses.
Losses. And that's true. Because again, at the end of the day, you have to remember that as a VC, it's not their money.
So
This
yeah,
is a family fund. This is again some sovereign wealth fund from wherever that are chipping in here, and their objective is to give them that at least 10x at that point, especially right. It's higher even if it's an earlier higher risk fund, because sometimes they even think 100x. How do they get to that? And if you can find a way to validate all those assumptions with those things, you'd end up with a better deal. But even if you do have a bad deal, but if you really need that, then you're gonna have to roll the dice and you know um run with it, because at the end of the day, at that point, I'd already, correct me if I'm wrong, but you're also thinking exit at that point. You cannot just run this as a legacy thing
yeah,
forever. You have to eventually exit this out. And at that point, as the valuation gets higher, there's a smaller pool of people that can afford to acquire you, or you're gonna have
correct,
to go
correct,
straight IPO.
correct. And these are the things that the investors are rightfully assessing. Um, and that's why it's important that story is a bit clear. If you think about an investment fund, right? Normally runs, I don't know what, 10 years.
Yeah.
So let's say your family office, you put money in a fund. That fund, and I think what they do, I'm not from that industry, is for the first 10, 20, 30% of their funds, they try to go small check and spread. Let's bet on everyone with smaller amounts. Maybe that's how early stage thing works also. But
Mhm.
as some of these winners, quote unquote, emerge,
Yeah.
the ones that are better traction, the balance of the fund, they
Double down.
consolidate it, double down, right?
Mhm.
And that happens also. So in BNC discussions, usually that's the case. The BNC investors will say, I'm gonna write a smaller check, or I'm gonna lead, but this is my minimum check size, but I'm not gonna give you the full, but I wanna track you because I wanna do your series D or E or F. They're also looking at it that way.
Got
So
it.
we have investors that are investing on us, but they're also investing in other B2B platforms elsewhere, right? So again, you have to, if you want to get the investment, you have to also look at it from their lens. And so when you try and paint your story, how do you slowly show to them that you're emerging as one of the winners that
Mhm.
will eventually attract those? At each stage, the dimension changes a bit, but that's by and large, I feel,
Mhm.
in terms of how I see things, I feel like that's how it works. I may be wrong.
Again, who knows? We're this uncharted territory, so whatever. Again, I just want to understand. We want to understand the perspective of what it's like to be a flag bearer for the ecosystem. Because again, everybody will try to follow, right? Not to copy you, but again, this will come in handy when somebody's raising Series B, Series C, and this is gonna be an elite resource. Now, last questions. Are you starting to look at other startups and direct angel checks now too? If you are, what do you look for in those little checks that you write for other founders?
We are just, even before, we always look out for ideas, right, that either complement with us or compete with us. But yes, the answer to that question is we have started to look. At least that we have done. And of course, this is uh, if we are, and it goes back to my earlier answer, that the biggest question we need to face is what's the boundary of the business? To what extent do we stretch it out?
Mhm.
Once that's starting to get clear, then you realize, okay, what capabilities will I have to build on my own, and what capabilities do I partner, buy, I don't know, invest in, and so we have to start to look at these things as that bigger picture emerges. It's a bit vague right now because we're not done with that exercise, but
Yeah,
as part of that exercise, we are looking into some of these things.
got it. All right. Now, before I let you go, were there any extra tips for startup founders entering Soonicorn territory that you can share so that if they are gonna get here eventually, they know what to do and what not to do?
Sure. I think this, you mentioned the term flag bearer. I think
Mhm.
it's a lot of pressure. I don't like the
I'm
term.
sorry, you
I
guys.
don't. No, 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 no. I mean that in a good way, in the sense
Uh-huh.
that it creates a lot of unnecessary pressure or distraction that you probably don't need as a founder, right? So the only thing you need to be focused on is building your business.
Yes.
And if your business continues to track, hopefully you get more customers, more investors, more suppliers, and that makes the ecosystem a lot more healthy. So, and I mentioned this in the other webinar also. Don't try and go after a certain series or a certain amount of money, or don't go after fundraising. I know that's, some people might say, oh, you can say that now because you've done BNC. But that was never the driver, right?
Yeah.
And just focus on the value that you're trying to create. So that at least the hype is not artificial. We also don't want to create a startup bubble, right? Where
Yes.
the ecosystem is getting now a lot of these capital, but the ecosystem is not able to deliver. That's also not good,
Yes.
because the ecosystem is not able to deliver. Then the entire Philippine startup scene is going to be looked at globally as a bubble and a fad. So the best way to protect the ecosystem is to take care of your business
Exactly.
and to encourage other people to do the same, and to encourage other people with ideas to start acting on those ideas, and then hopefully that just creates this sort of effect.
And that's true. And it's eerily similar to what Roland said, that they don't even want to be called a Soonicorn. They don't want to be called a flag bearer and whatnot, because it's so much pressure. And again, they're just trying to do their shit, right? Technically, and
Yeah.
get things done. And I mean, it comes with the territory. What I like that you guys are focused. And again, thank you very much, ER, for gracing us your time on the next unicorn sessions. But before I let you go, invite people over. What's next for you guys? And I'm excited when I get you back when you're a unicorn already. Okay, but what should people look out for with Growsari in the next coming months?
I'm hoping that wherever you are in the Philippines, Growsari will soon touch your community. We are quite serious about accelerating our geographic footprint. So hopefully, watch out for that. So if you know anyone who wants to provide warehousing or some sort of logistic support in your province, right? Give us a call. We might be able to connect to our platform. If you have small business owners or side store owners in that area, tell them we're coming. And of course, we're always on the lookout for super motivated, talented people who want to join the cause. And
Hunter ER is in the house already.
the team is always expanding. If you guys think that the vision is exciting, and hopefully through this conversation you get a sense of who we are as a company also, we're happy to talk to you.
All right. Thank you very much, ER. But before I let you go, follow us on whatever podcast app you're listening to. And again, this format is actually also going to be on YouTube. So again, you get to see the pogi and pretty girls that are behind these things. It's not just all voices. And bear in my face. That's what it is. And again, lastly, if you want to be part of the community, it's going to be the Hustleshare community on Facebook. And sorry, if we also say some jargon, it's going to be in the show notes on hustleshare.com. Again, ER, thank you very much.
Thanks,
All
Ron.
right.
Take care.
All right, I'll see you guys in the next Soonicorn sessions.